They say money is trust, but trust is fragile. And when it breaks, empires tremble. In 1971, the world lost that trust. Gold, the metal that anchored civilization's wealth for centuries, was suddenly gone. The promise that every dollar was worth something real vanished overnight. But America, instead of collapsing, did something extraordinary. It replaced gold with oil. This is the untold story of how the U.S. turned a global crisis into the foundation of modern financial dominance. A quiet transformation that still dictates every market, every currency, and every war. The world didn't vote for it. No one asked. But since that moment, every nation on earth has been paying the price. To understand how it happened, we need to go back to a time when money meant metal, when wealth had weight. After World War II, the United States was untouchable. Europe lay in ruins. Japan's cities were ashes. But America was overflowing with gold. 2/3 of the world's reserves sat in Fort Knox. The U.S. produced half the planet's industrial output. It owned the future. In 1944, as the war neared its end, representatives from 44 nations gathered at a small hotel in Bretton Woods, New Hampshire. The goal was simple: rebuild the world economy and prevent another depression like the one that had helped spark the war. What they created there would define the next quarter century, the Bretton Woods system. Under it, the U.S. dollar became the world's anchor, backed by gold at a fixed rate of $35 per ounce. Every other currency was tied to the dollar, not gold directly. It was an elegant system. Trust the dollar because you can always trade it for gold. For a while it worked perfectly. Trade boomed. Europe recovered. Japan industrialized. The American middle class grew into a global symbol of prosperity. But there was a flaw, one baked into the system itself. The U.S. could print dollars, other countries could not. As America spent abroad, on military bases, foreign aid, and an expanding consumer economy, those dollars piled up in foreign banks. At first no one complained. The dollar was as good as gold. Until they realized it wasn't. By the 1960s, France, under Charles de Gaulle, began to suspect the U.S. was exporting inflation. The French called it America's exorbitant privilege. Washington could simply print paper, and the rest of the world had to send back real goods. So de Gaulle decided to call the bluff. In 1965, he ordered the Bank of France to exchange hundreds of millions of dollars for gold and demanded physical delivery. Ships loaded with U.S. gold sailed for Europe. Fort Knox began to empty. Soon other nations followed. The illusion cracked. The U.S. was spending far more than it could back in gold. The Vietnam War, the space race, and massive welfare programs had drained its reserves. By 1971, the math was impossible. There were far more dollars in foreign hands than gold in all of America. If everyone demanded redemption, the U.S. would go bankrupt. So, on a quiet Sunday evening, August 15, 1971, President Richard Nixon went on television and did what no one thought possible. He temporarily suspended the dollar's convertibility into gold. It wasn't temporary. That single announcement, delivered with calm confidence, detonated the global monetary order. The Bretton Woods system was dead. The dollar was no longer tied to gold. The world entered a new era, the age of fiat money. Fiat, from the Latin let it be done. Money existed now not because it was backed by anything, but because governments said it was. At first panic, markets plunged, inflation surged. The 1970s became a decade of economic chaos. Oil prices soared. The dollar's value collapsed. Americans waited in gas lines that stretched for miles. For the first time it seemed the U.S. had lost control of its own money, and the world's faith in it. But in the shadows, Washington was already working on a fix, a new anchor for the global system. Not gold this time, but something far more powerful. Oil. Oil was the real engine of the post-war world. Every factory, car, and army depended on it. Whoever controlled oil controlled everything. And in the early 1970s, that control was shifting. The Organization of Petroleum Exporting Countries, OPEC, had begun flexing its power. Arab nations had realized the West couldn't function without them. When the Yom Kippur War erupted in 1973 and the U.S. backed Israel, OPEC retaliated with an oil embargo. Prices quadrupled, inflation exploded. Western economies froze. But from the chaos came opportunity. Behind closed doors in 1974, U.S. officials met with Saudi Arabia, the world's largest oil exporter, to strike a deal that would quietly change everything. The agreement was simple but brilliant. Saudi Arabia would price all of its oil exclusively in U.S. dollars. In return, America would guarantee the kingdom's security, militarily, economically, and politically. Within a few years, every OPEC member followed. The petrodollar was born. Now every country that needed oil, which meant every country on earth, first needed dollars to buy it. Demand for the dollar was instantly global again. The U.S. could print money freely, and the world had to hold it, not because it was backed by gold, but because it was backed by energy. It was a masterstroke. The dollar became not just a currency, but a weapon, a tool of control. Nations that resisted faced exclusion from the dollar system, economic suffocation. And the flow of money back into America was staggering. Oil profits, recycled through banks, investments, and U.S. Treasury bonds, funded Washington's deficits for decades. The world believed it was buying oil. In reality, it was buying dollars and American power. But like all empires built on trust, cracks began to appear. The system depended on stability, on cheap energy, and faith in the dollar. When either wavered, the illusion trembled. In the late 1970s, inflation soared again. The Federal Reserve, under Paul Volcker, responded by hiking interest rates to levels unseen in modern history. The world gasped as the cost of money itself exploded. Developing nations plunged into debt crises. Latin America bled. Entire economies collapsed under the weight of dollar-denominated loans. But America survived and strengthened, because global capital fled to safety, and safety meant U.S. dollars. By the 1980s, the petrodollar had fully replaced gold. It powered Reagan's military buildup, Wall Street's boom, and a new age of consumer credit. The world had entered a paradox. The more dollars America printed, the more the world demanded them. Wars, sanctions, and financial crises all reinforce the same truth. Control money, and you control everything. Fast forward to the 21st century. The petrodollar still rules, but its foundation is eroding. Nations like China, Russia, and even Saudi Arabia are quietly signing oil deals in other currencies. The BRICS nations are hoarding gold again. Central banks are buying bullion at record rates. The same story, the same cycle is unfolding. The world is losing trust in paper promises. In 1944, gold made the dollar powerful. In 1974, oil kept it alive. But now, as energy transitions and debt explodes, the question is, what will replace it next? Because every system built on faith eventually faces its reckoning. When gold backed money, we believed in metal. When oil backed money, we believed in power. Now money backs itself, and belief is fading. The petrodollar was the bridge between two worlds, one tangible, one imaginary. It bought time, growth, and an illusion of permanence. But like gold before it, its power will not last forever. The dollar's greatest strength, its universality, may become its greatest weakness. When everyone holds the same lifeline, no one can afford to let it go until it snaps. And when it does, the world will learn again what America learned in 1971. Trust is not infinite. And when the foundation cracks, everything built on it comes tumbling down. 3 lessons remain. First, money without limits creates power without accountability. The ability to print value from nothing always corrupts those who wield it. Second, empires don't fall because they run out of force, but because they run out of faith. Every collapse begins as a crisis of belief. And third, what replaces the dollar won't just change trade, it will change civilization. Gold, oil, debt, digital, each is only as strong as the story people believe. So as the world moves toward a new system, whether backed by energy, data, or code, remember this. Every era thinks it has mastered money. Every era is wrong. Because no empire and no currency lasts forever. If this made you see money differently, don't just watch, understand. Because history doesn't repeat, it just changes the currency.